6/22/2013. Time is 8:33 a.m. Pacific Standard Time. It's Saturday. We're covering the S&P 500. It's a major update for the MMTs and our network around the world and all the Titan traders. Listen, all of you need to know one thing, and here is the following. Is that this long-term rising 10-week moving average, which has been the major catalyst for this bull run. We've been in a bear we started going into the 13th year of the bear that started in year 2000 when I was getting net short the NASDAQ 100 up there at 5,040. Now, having said that, every new bull that does get born does have to have volatility. This particular bull run that we're in, if you take the calendar years of bears with mini bull we call them mini bull rallies, along the way, is that we've only got 5 3/4 months of bull versus 13 years of bear. Period. So, as I see it here, the major catalyst for the S&P is 1580, and this is a major 20-week moving average at 1582. With the quadruple witch that just happened on Friday in the last hour of trade, they came in, they bought the dips a little bit, but the true support level for this bull is way back over here, where my pointer is. It's going to be 1550. So, within the volatility, 1620 is going to be the major end of this resistance level for the S&P as far as the broader index. And the S&P component has various different sectors that are within the broader 500 stocks that are in there, healthcare being one, technology being another, and you got your consumer stocks in there, and you've got your various different transportation stocks in there and whatnot. But some of these key sectors like the healthcare and some of the other ones individually are weighted 40% to the S&P 500. Now, the bulls are in trouble in the near term. The money that remains on the sideline is going to try to get put to work. However, the volatility in our last major update that we started on 5/22 of 2013, we clearly stated that volatility for the bull and that the bear volatility, we're going to have two markets. You were going to get your bull volatility, but every time it went up, you're going to sell into the rallies. That's exactly what we said. So, and then going into the crucial meeting of this last week was the Ben Bernanke FOMC meeting. What did they do? They bid the market up electronically going into Wednesday meeting. They had a 2-day rally back up toward the highs in the Dow, and the S&P was getting close up there to, you can see right here, this last week is where they bid that up. Then this weekly level, and then bam, they pulled the plug. So they bid it up going into the meeting. Then they talked about QE3 and pulling back their purchases and lots of other things that created the volatility. So basically, we have a broken bull because until this long-term bull 10-week moving average, until there's a close back above it, it will remain not the bull that it was until we get back above it. And that's going to be the bottom line. The other bottom line is on the daily, the rising 50-day moving average, where everybody bought every dip or slightly above it where it started. That was your bull. And that rising 50-day simple moving average was a key part of this bull run. Every time we had a pullback, bam, that 50-day, we had a pullback. We went up into volatility. We pulled back. Now, one of the key things about it is that 50-day simple movement average was rising in value, which made that bull stronger. Now that we have stopped and we're tilting here, and this is what that daily perspective looks like. When we take a look at the monthly S&P 500, well, you can see over here, these are monthly bars, and this is a 10-month rising moving average. Ultimately, on a monthly level, we're right here at a double bottom. This is where the selling started. This is where that support level is. But if we break down below it, we're going to be looking at the 1550 in here. and it's going to be, this is going to be 1550 right here toward the bottom of this. That is that lower support level. So we know where the lower support level is. We know right now on the weekly level what we're going to be doing, because we trade index options on the S&P 500. Well, we trade calls at times, and when they get overbought, we buy puts at times. And it's been a parabolic move up this year, and that summer volatility, and there are summer rallies that will come into play. The catalyst is that the July quarterly earnings start in July. So July is going to have a higher volatility rate than what we've had in 2 weeks of May and to current the first 3 weeks of June, both bear and bull volatility. So here is that weekly support level. We're going to be range bound to 1620 is the resistance, or slightly above the lower end of this bar right here is going to be 1628 on the S&P on the upper end of that resistance level. So if we do hold short-term support at the 20-week, remember, the 20-week is a major weekly moving average, just as the 10 was. The 20 is always a more powerful support level, whether it's a 20-week or a 20-day or a 20-month, it doesn't matter. It's always the lower end of the two that has the most support. So basically, that is going to conclude the update. We will be taking a look, and I will just let people know up front right now that this is the S&P 500. We'll be taking a look at the quarterly. There are quarterlies, and I want everyone to know that this next week, starting Monday, is the end of the quarter. So the end of the quarter is a major rebalancing where you're going to have both some bull side upside short-term trades for the bull, but then you're going to come back, and then the bear is going to come back in. So people have not been involved in volatility. They forgot what that was like, because this thing went parabolically straight up, and people got very complacent, very disorientated, as I would say. No fear. The fear indicators, which I'm going to cover next, is the VIX, again, has made highs, and until those highs stop going higher, then you're not going to have a bottom in the S&P. But there are intraday ranges that we will set up for our bigger traders and even some of our smaller ones. And we're going to go over all of the calls and versus the puts in the index within the volatility and how those would be traded. And that will be on the S&P 500 as far as our options go. The major update, once again, on the S&P 500 is right here on the weekly level. Somehow I lost the data here. We'll put it back over here. So we've already got that done, but it is everything that we're going to be looking for. So I'm going to conclude the S&P 500.